Aloha everyone, Joshua Hayes at BigWaveTrading.com. I can't remember if it's been a week or two since I made the last public video lesson. I've been really busy, so there's a lot to discuss. This market uptrend has been very weird. The V-shaped rally off the lows. Brahma Bull posted in our chat room on Monday morning a chart that just showed the SPY just V ramping to new highs, and it looks like that's what's going to happen. Now, I want to remind everyone on Sunday night before this open, I told everybody I was buying the SPY, QQQ, and SMH in my long-term portfolios, not in one or two of my long-term accounts, in all of them, mine and my wife. All of the long-term accounts, they all got SMH, QQQ, and SPY. Was it a load? No. I'm still not getting my ideal setups, i.e., a close below the rising 200 SMA, buy stop directly above a rising 200 SMA. If that would have happened, that would have been a load. Or on the pullback, some kind of hammer with my oversold RSI, which is not shown on this telechart. That's a load. That kind of hammer is a load. This kind of hammer is a load. This gap up after a big, huge up day is not a load. So we're not quite getting everything to line up. But that being said, bought QQQ, SPY, and SMH. I buy the panic in long-term accounts. Always have, always will. It will never change. Post it to everybody in the chat room on Sunday evening before they happen. And then today, the biggest holding in my long-term portfolio for food stocks is CAVA. I am most bullish on CAVA out of every other stock out there in the retail food group. I am most bullish on CAVA. Awesome day today. Am I taking any profits? I started to think about this, guys. I wanted to think about taking 10% of profits after today's session on CAVA in the long-term portfolio. But then I took a long-term look at CMG's chart, and I figure, let's look at CAVA. Okay, so I'm looking at CAVA here. I'm looking at CMG here. It might be like right here. Could pull back deep, but look at where it could ultimately go even from this high here. This portfolio, long-term portfolio, is 5 to 20-year holdings. I don't want to miss out on another 1,700%, which I think I could see with CAVA. So after thinking about it for a little bit this evening, I'm not going to sell any CAVA in the long-term portfolio. So long-term portfolios are rocking. I also want to mention that the swing position portfolios, while they are underinvested now, they've been doing pretty well. And we had one nice winner in there, UBXG. Now, I can't tell you why the day before I decided to sell everything at the market with a 150% gain. But I tell you what, I'm sure fucking glad I did. Jesus Christ. This is why I hate Chinese junk stocks. Anything from China, especially if it has a letter X or Z in the ticker, is just junk, just scam. But that turned out pretty well. And that goes to a point. Every swing trade that we're taking right now is working, but unfortunately, because of the nature of this uptrend off the lows, I can't get size. Remember, guys, my personal, what I want to see lead to really push it on that swing side of my end, I want to see the FFTY lead. Is it leading? No. Look at that relative strength line, the white line below. No. Look at ARC. Is it leading? No. IWM. Is it leading? No. Great day today. Love to see more of that. Breakout to new highs. This is the craziest looking fucking chart I've seen in a long time, guys. To break out, fake out, break down, then really break down. Now to be right back in the middle of it all. Wild shit, guys. Wild shit. It's just unbelievable. Speaking of wild shit, the VIX going from 15 to 65 to 15 all within a span of 3 weeks. Nuts, guys. And that's why whenever I do get size in a new long position like AHR, this was the initial position, but this right here, this was a low day. volume truncation. Almost. The IPO date is volume is larger, but look at all the pocket pivot point signals leading into it. Basically on a Zoom 5, it's a basically, or a Zoom 6, I guess is what we call that chart. It's a volume truncation with max green bot, but the load came on the next day with that hammer candle, and that's what I did. Loaded into it. However, after this pullback right here, had to take some protective action, but instead I get a gap down. Do I buy it back after losing basically 75% to 80% of my position? I sure don't, because it's not the appropriate candle. Hammer. It's just so wide and loose. Now, guys, I'm telling you, in a great market, in a QE tape, this is still QT tape, in a market where the ARC, FFTY, or IWM is leading, in a market where the Fed is buying assets on their balance sheet, in a market that's moving in universal lockstep, I'm loaded in AHR. This day doesn't happen, and we have full, not full, but because we're taking profits on the way up, obviously, but we're going to have a very large position in this kind of stock when things fully align, and things aren't even close to being fully aligned yet. And on that note, that can easily be seen because now RSP is our leader, brand new all-time highs on RSP. But the QQEW, not at new all-time highs. The QQQ was our leader. It's not there. SPY is not our leader. Now DIA and the RSP are our leaders. So it's broadening out, but it's not necessarily what I want to see lead. So it's going to be a little tricky, difficult to navigate. But ultimately, guys, I always think to myself, QT tape or QE tape? It's a QT tape. It's going to be difficult no matter what. It's not going to be smooth. QE tape, smooth. QT tape, not smooth. Fed buying assets on their balance sheet. Fed's running off assets on the balance sheet. They are running off assets still. They are not adding them to their balance sheet. So the biggest player in the stock market is not on our side. So we have QE not there yet, which is coming. It's all about to line up, guys. And that's when we can really push it with our swings and get some real size. So it's almost there. It's just not quite there yet. So with that being said, I do have two new swing positions on the quality side. VERX is a new swing trade, 99 composite rating, 95 EPS rating, earnings winner beating on the top and bottom line, 15% sales growth in the most recent quarter. I have a pocket pivot point signal, that's that blue spike here, as it crosses the 50 SMA. This one's not a chase, so this is why I like it. So I want to try to get long above the high of the day, calculating my size and risking to this low. Now, remember what I was talking about, quantitative easing, the IWM leading, Fed buying assets on the balance sheet. Guys, I calculate my size and risk to this low, and instead of maybe risking 1R of my total capital, maybe it's 5R. That's the difference between this market, especially in the month of August. Guys, September is historically, seasonally, our worst month of the year. Like, everything is misaligned. We do not have, like, if QE, Fed buying assets on balance sheet, pocket pivot point signals, volume truncation, max green bot, perfect setups like AHR, and it's the month of November. Woohoo! But it's September, guys. We're going into September, so keep that in mind. So VERX, calculating the size and risking to this low, want to get long on strength above 37.20. I don't want to see this goddamn thing gap up, pull back, and then fill. If it pulls back, I need to see it go below 37.20, reclaim 37.20, then I get long and start trailing stops on the way down. I also have a pocket pivot point signal above the 50 SMA and wing. I'm going to take it, but look at the structure of VERX. Look at its rising 50 SMA and look at wings declining 50 SMA, which means more than likely, if it triggers and fills on the way up, I'm going to need to see immediate price gain similar to the candle that I'm getting long off of, or else we should expect it to pull back. To be honest with you, it'd probably be safer to set a limit order around 395, get filled there if you're looking to get filled on a pullback. My goal is to try to get long up and above 405.37, but because of this market, because of the structure of the 50 SMA, I have to calculate my size and risk to this low. In a hot market where everything's lined up, 50 SMA is moving higher, I calculate my size and risk to this low, and instead of doing 1R of my capital at risk, total capital at risk, maybe I do 3 or 4R on this one. But in this market, it's hard to do that. But Wing at least is giving me a pocket pivot point signal on the 50 SMA, just like Verx. Wing sports a 90 composite rating, 99 EPS. So there's a 99er, and Verx is a 99er. Now, what I want to do is take a look at my weekly squeeze scan and see if we have anything develop that I can set a good to cancel buy stop order on with massive size, because historically I know we're going to get some big gains. Let's take a look at those charts. All right, so before we just go through the scan weekly time frame, I want to remind everybody what we're looking for. ACGL is a recent breakout from this scan that I had on watch. Did not take the buy stop above this high. I was monitoring it closely and I liked it, but I think if I made a video lesson, I know I made it to members, but I don't think I made it public. But if I made a video lesson to public, I told you guys at this point that I wanted it to pull back and then go. Instead, it is just a V ramped higher. So the good to cancel buy stop above this high in the squeeze would have worked. I was looking at it. It was one of my favorites. It just didn't set up right. And I'm going to show you there's an earlier breakout of what is actually proper. So when it breaks out of this base, even though I really liked it and it was my top one, there's not even any red dots here. Now, when we go back to this breakout where we have the moving averages properly stacked in a line, we not only have red dots in the base, but there's yellow dots. And that's how you know you got the best. So with this breakout, ACGL was able to produce a 50. Now it's a 100% price gain from. But we had red and yellow dots. Another recent stock so ACGL, you can see in the lower left how it's highlighted. So it's in the weekly scan. Another one is APP. We've been watching this one set up. We had the buy stop above here. Technically, it still hasn't triggered yet. We got red dots, so I like all of that. The moving average stack is aligned, but I want to look at the last one that worked on the weekly time frame that led to APP making a 80% move. Once again, we got those red dots, but what did we have in the last time? A yellow dot. So there's another yellow dot. Is it that way now? Not so much, but the biggest problem is, once again, just like ACGL, I'm getting that V ramp into the breakout, and that kind of move off the lows just makes buying a breakout too risky. So those are two recent ones that are still in the scan. One that I didn't get because it didn't have the appropriate sales growth. Notice how race, even though it's still technically in a squeeze, how it's not showing up in this scan. It's because it didn't have 30% sales growth. That being said, though, look at the moving average structure. Look at the tight base. Look at the yellow dots, red dots. Like I said, going to start doing scans for stocks over 100 that also have sales growth that's above 0% in the most recent quarter. Looking for these squeeze scans. So there's Race, App, and ACGL. And then, of course, the best ones and leaders with over 100% EPS and sales growth, NVIDIA. And you can see when it was basing here, look at all the red dots, breakout, and SMCI. Look at SMCI basing here. Moving average stack on NVIDIA, perfect. Moving average stack on SMCI, perfect. SMCI, what did it have as well? Red dots, yellow. Now, NVIDIA didn't have the yellow dots, but look at how many red dots in a row. So just beautiful, beautiful, beautiful. So that's what we're looking for. So now that you've seen it in SMCI, NVIDIA, Race, App, ACGL, let's see if we have anything that looks like that currently that we can set buy stops on. S, nope, needs more time. No red dots. WDC, needs a lot of work. No red dots. IoT, we got just a wedge. I need to see another base. Need to see those red dots come back. But it looks like this is just going to be a wedge higher without me. But I really, really like IoT. It's one of my favorites. DFS, we're going to need a consolidation. Notice here, we had the red dots and the yellow dot broke out but pulled back due to the market. That's just what's going to happen sometime. Everything was properly aligned. It just didn't go, probably because of the market pullback, but more than likely also the seasonality. There's app. We've already reviewed it, watching it closely. Maybe it can give me a handle. YPF, watching it closely. This one needs to tighten up and then go sideways. OKE, remember we've been talking about this one. I think I've even brought this one up. I was watching for it to, as it wedged here, to give me some kind of handle. Instead, it just keeps wedging. I can't buy this breakout, guys. I just can't do it. I got to maintain discipline. Everything's properly stacked. Just can't do it. It isn't the proper base breakout. ACGL, GGAL needs more work. PDD, I like this one a lot. I'll be watching this one. Still don't have any red dots, but I really like PDD. Hood needs more work. Roblox, we're back to where we started with Roblox and S. They need more sideways action, but the moving average aren't stacked properly in Roblox, and they're not properly stacked on S. So there's a lot of work to do there. So there's nothing really setting up right now, but I want to show everybody I'm constantly monitoring it. I'm constantly looking for those nice tight setups. Remember, SMCI consolidation, race consolidation, ACGL consolidation, app consolidation, NVIDIA consolidation. Those are the kind of consolidations we're looking for. You can clearly see we don't have any right now, but I'm on it, and I'm hoping after QE starts, after a few rate cuts, start seeing that the Fed's buying assets on their balance sheet. We start to maybe see one of the FFTY, IWM ARC leading. Yeah, man, I'm very excited. And remember, any panic sell off, I want to buy. I want to buy every single panic sell off. SPY, since getting long, got a 10% gain. QQQ, since getting long, those Monday lows, 13% gain. SMH, since getting long those lows, 25% gain. And look at what it is if you would have done SOXL, if you would have bought with me on that low, 80% gain. So pretty awesome. We're doing very well in the chat room. Still not day trading yet. There's a lot of things moving in the morning still. Let's see today, you know, a lot of things moving. Look at this MNTS. This is one I was watching last night. Notice where the arrow shows up, arrow here. This is the line 124. But once again, breakout, pullback, re-breakout. It's just not smooth. So I'm just not coming in yet to day trade these setups. And the after hours, we're just not seeing any follow through to anything. APDN could have set up for after late day after hours move, didn't happen. PRTG could have done it, didn't happen. So I'm still not aligned to be day trading yet. Swing trading, everything we're taking is working, but we're not getting the size, and I'm a little under invested here. Long term is crushing it. Quarterly portfolios basically have been fucked due to the constant rotation and just the constant bifurcation. When you have constant bifurcation and constant rotation with leadership, it's very hard to do quarterly portfolios. So I'm passing on them this quarter. I'll resume them again in quarter four, and I think they're going to do extremely well in quarter four. But this recent go round just hasn't been good. But overall, powerful rally. I'm nothing but bullish, but we're heading into September. If the market doesn't pull back in September, I think it's going to pull back in early October. V-shaped moves are nice, but, you know, they're hard to get long.